Hi guys, this is Pradeep. Today I am going to explain about the foreign currency settings and its valuation. So I'm going to split this video into two parts. So first part will be the foreign currency settings. Second part will be the foreign currency valuation, which is one of the month-end activities. First, we have to understand what is foreign currency. So we know that we can set different currencies in our company code, like we have our local currency, which you have defined in the currency type 10. Plus, you may have also activated global currency, that is as per your settings. So let's say my company code currency is INR, and if I am going to post any transaction other than INR, so that will be treated as foreign currencies. So those transactions can be anything. It may be related to customers, it may be related to vendors, it may be related to our GL also. So that means when in month end, like for example, today exchange rate is something, and on that rate we posted the transactions. Now on month end, when the settings or the currency exchange rates are different, so that time the exchange rate need to be, or those transactions need to be evaluated. So it's no one is going to manually do the valuation. We are going for a batch processing, and through the batch, or once that configurations everything will be done, then once the user is going to do the batch processing or foreign currency valuation, so automatically whatever the exchange rate loss or gain, automatically it is going to adjust in our books of account. So that concept is known as your foreign currency valuation. But when you are going to define the foreign currency settings, so a couple of things we have to understand, and let me explain few points here when you are going to define your foreign currency settings. So let's go into the system and understand this one in more detailed way. When foreign currency is done in SAP, when foreign currency valuation is done in SAP, so all your open items, your balances, your foreign currency will be converted into local currency. So ultimately we are going to do the valuation by taking the base as our local currency, because already transactions are there in our in different currencies other than your company code. So for that we have to maintain the exchange rate settings in the system. And as I said, during month end or as a part of your closing activities, the accounting department or the finance department, they are going to execute postings for automatic posting for the valuation. And in S4, with reference to this business process, so there is one simulation accounting and simulator concept is also there, but today I will focus on the foreign currency settings only. And this exchange is difference posted to either it will be revenue or it will be your expenditure. That means if due to this valuation, if there is a loss, and that loss we are going to record in our books of account, so that means we are going to transfer that into P&L account. And because of that, if there is a gain, and that we are going to credit into P&L account. So after taking this foreign currency valuations, the postings, one will be your actual valuation, which is at the month end, and other will be the reversal one. Okay, so here in my PPT you can see some settings are there. So those settings where you will find in your SAP screen, and why it is important. So you have to keep in mind foreign currency valuation always done for your balance sheet items, and for that what are the settings are required. So the first settings which I have listed in my PPT, so that is we have to maintain the exchange rate types. So when you are going to define the exchange rate types, there are three exchange rate types are there mostly. One is the popular one, that is your average rate for posting and clearing, that is defined with M. Then we have buying rate, then we have selling rate. So buying rate defined with G, selling rate defined with B. And other than this also there is one more is there which we are using in controlling as P, and this is used for cost planning. So let's see one by one. And where we can see this one, if you go to your NetWeaver, okay, which is there in 22, as you will find this one under your ABAP platform, and under this if you go to the general settings, so under general settings if you go to the currencies, so here you will find the check exchange rate types. Okay, so the first one, OB07 transaction code, exchange rate types, and let's see what is there. So as I said, these popular exchange rate types are available here. So mostly you will find that we are using either M, or we are using G, or we are using here the B one, plus P for cost planning is also available. But practically if you'll say, we are mostly using M, that is your average one. So here you can maintain your exchange rates. Then there are three tools are required to maintaining these exchange rates. So one will be your base or reference currency. Second one is your exchange rate spread. Third one is your inversion. Okay, so here if we'll check these columns, these are, so one will be your reference currency. So what is reference currency and when we are going to use it? What is the meaning of reference? Although you will find the use of this one is less, but this option is there. Now, for example, let's say our local currency, as I said, local currency is INR, local currency INR, and we had posted some transactions in USD, and that we have to do the valuation. Now here what we are going to do, in this case, we will take here the conversion we will take, not directly, for example, USD we are going to take as reference. Okay, so our local currency, let me take one Excel, it will be easy for us to understand. So our local currency, or which is your company code currency, INR, and foreign currency, Euro. Foreign currency, Euro. So transactions are, let's say it is there in Euro, and instead of Euro to INR transfer, instead of that, we are going to take here the base currency as USD, which you are going to maintain. Suppose you are going to take here M, this one M, and here you are going to maintain USD like I have maintained here. So you are going to maintain USD. So how we are going to do this foreign currency valuation in this case? So here Euro to INR, but instead of that, we are going to take here that INR to USD. So first find out the Euro to INR to USD exchange rate. Okay, so let's say this exchange rate is, you can verify this one with any exchange rate websites. So this information again, companies, they are integrated, interfaced with different third-party websites, or they can purchase, or they can manually enter it. I will come to that screen. So here we are going to find out INR to USD, and let's say this currency is this, it is let's say 0.01208. Okay, then we are going to find out Euro to USD. So we supposed to do Euro to INR, but instead of that, we are finding here INR to USD, its corresponding rate, then Euro to USD, its corresponding rate. So this rate is, let's say, 0.9882. So this this value is going to give you the exchange rate type. So that means we are going to find out here Euro to INR. So take this rate, this one divided by this one. So your exchange rate will be 9.096192. Okay, then this currency, or the currency is then translated if this were exchange rate, and this will be entered in the system. And if you'll check this one with any website, you will find it is approximately similar. So directly we are not going to take here the rate which is there, Euro to INR. Instead of that, here we take the, or we took here the base reference currency. Okay, so some companies, they used to follow this one. So as per my calculation, what is my, if I'm going to use the reference currency as USD, so it will be 90.96, the conversion from Euro to INR. Now let me check this one in xe.com and what we are getting here. So I want to take it from Euro to INR and check here, let's say 1 euro, just check. So 91.07546. So as per my calculation, if I'm going to take USD as reference, almost you will find this one. So if you are going to take here the example as reference or reference currency, so you want to take the reference currency, then you may also do the calculation. But maybe in interview, if you are getting the question, although we are going to use here, I mean, if you are going to use here exchange rate type M, and suppose we are going to take one currency as reference currency, then how we are going to do this calculation? Next setting is define translation ratio, this one. So what is the meaning of translation ratio? Translation ratio means when we are going to compare with two currencies, how we are going to do the comparison. For example, let's say our local currency INR and the foreign currency is USD. So it is one USD equivalent to how many INR, or what is the relation here, or one INR equivalent to one USD, or it is less than one USD. So how we will get this one? This settings depends like in future how we are going to maintain our exchange rates. Check this. Now if I will select here, suppose let's take here GBP and USD. Now you can see here the relation is ratio is 1 to 1. That means 1 GBP equivalent to, it's not 1 USD, of course we have to maintain the exchange rate, but the relation here it is maintained 1 to 1. Now if I will take another combination, suppose let's say I will take here INR, or let's say GBP and INR. You can see here it is 1 to 100. That means 1 GBP equivalent to 100 INR as per these settings. Or if I will check here, suppose INR to GBP. So 100 is to 1. So why these odd combinations are there? Somewhere it is 1 to 1, somewhere it is 100 to 1 or 1 to 100. It depends. If we'll, for this one, I will go to the xe.com. And here you can see this is xe.com. Here you can just check. If you will select here, suppose USD and GBP, check the combination here. So 1 USD, how much, or 0.78 USD equivalent to 1 GBP. If I will reverse it, so you will find 1 GBP equivalent to 1 GBP equivalent to 1.27 USD. So that is why here it is like difference is not that great, that like big difference is not there between your GBP and USD. So that's why when we checked our settings for or GBP to USD, it was maintained 1 to 1. So that means 1 GBP in exchange rate, we will enter here 1.27587 as our USD. Whereas if in this place, if I am going to change it to INR, you see the gap. So 1, or you can say 0.012785 INR is equivalent to, or 1 INR is equivalent to this much USD. Okay, so that means in the figure is coming in cents. So that's why whenever we checked INR to GBP, now you just change here to GBP. Now see here, 0.00946666 GBP equivalent to 1 INR. So here gap is too much. So that is why where gap is too much, SAP maintained or recommended that you maintain here it is 1 to 100 or 100 to 1. Where it is near about or approximately very near. So in that case, maintain 1 to 1 ratio. So that is why somewhere you will find two currencies, you will find 1 to 1, or two currencies you will find 100 to 1 or 1 to 100. So no need to change any settings if in system, if it is there wrongly, it is maintained like here it is GBP to USD 1 to 1. And when I check here my settings related to GBP to INR, it is 1 to 100. So no need to change anything. It is correctly given. So in NetWeaver, it is correctly updated. So it is 1 to 100 only. So that means when you will find the weaker currencies, it is 1 to unnecessary maintaining in cents, or let's say there is no meaning. So that is why this settings is there. So it is fine. No need to do any changes. Now coming to the next settings, which is enter exchange rates. So that means today, whatever the transactions we are going to post in foreign currency, and for the valuation purpose or for the transaction purpose, on which rate system is going to do the conversion. Okay, so maybe today our 1 USD is equivalent to how much INR. This will change time to time, means today morning some rate, maybe in afternoon another rate, or in evening another rate, tomorrow another rate. So that is why this rate we used to in old days manually we need to enter, or after that with interface we can take the service of any company, and from their database we will get these values. And nowadays it is fully online, so if there will be any fluctuation, automatically it will be reflected in your SAP system, so that any foreign currency will be transaction, it will be updated or it will be posted after converting in that particular exchange rate. So here if we go to the exchange rate, take one example. If I will take here, let's say GBP to INR, and you can see here the updated date is 7th August 2023. And here two options are there: direct quotation and indirect quotation. Any one you can maintain. So right now we have maintained, or I maintain here as 1 GBP, how much your INR. So here I have maintained that 1 GBP equivalent to 105.78 71828 INR. Okay, so if you are going to maintain direct quotation, then for all currencies maintain direct quotation. If you are maintaining indirect quotation, for all currencies maintain indirect quotation. Otherwise, inconsistencies will be there. So there is no harm either you maintain indirect quotation or direct quotation, but do it one or follow it one option only, direct or indirect quotation. Now this figure, maybe on your practice point of view, you can maintain this one manually. You can take the reference of any website and take that value automatically. You can take that value here manually and post the transaction, and system is going to do the conversion. But in real case or in office, it is through interface. It is interfaced with any service, third-party service provider. From there we are getting this exchange rates. So here we need to enter the exchange rate, and this is who is going to do this one. If manually we are doing, maybe user will go to this one, but they will not use the IMG screen. They will take the easy access and they will maintain there. But as I said, mostly it is automated. No one is going to do the manual settings. So once the general settings are completed, then after that we are going to do the valuation related settings. So in the valuation settings, you will find this one under your periodic processing. Then go to your valuate. And here two settings are important. One is your valuation method and another one is valuation areas. So in this video, I'm not going to explain that because it will take a full video. So valuation, let's say you have configured the valuation method and valuation area. Then after that, you are going to maintain your, come to this screen. So these three options very important: valuation method, valuation area, and your assigning the accounting principle. Then after that, you are going to maintain this screen. Prepare automatic posting for your foreign currency valuation. Here you can see two options are there: KDB and KDF. KDB is where we set the GL account for the like let's say we are going to do any foreign currency valuation, but this activity for month end purpose we are going to do this configuration. So let's say some transactions are posted for our GL and it is not open item. So in month end we have to do the valuation. So in that case we have to use here KDB. So you need to, if you double click, it will ask you the chart of account. So enter the chart of account. Then you need to add your valuation area, which you have configured in the previous step. And once you will maintain, then you will maintain your required GL account. You will maintain your exchange rate loss account, exchange rate gain account, unrealized loss, unrealized gain. So in detail, I will explain, but in another video, this video for general settings. So once you will maintain, then save it. After that, you are going to maintain exchange rate difference for open items, KDF. Mostly here you are going to maintain any GL account where open item is activated. Best example, your accounts receivable, your accounts payable, or any GL account where you have activated open item. So here again, same rule, double click, enter your chart of account, your valuation area. So you have maybe two valuation area for your customer open items and normal GL open items. So apply that, then update your exchange rate loss and gain account, then save it. Then so that in month end, when user is going to run the foreign currency valuation, so automatically system is going to calculate the exchange rate loss and gain, and accordingly it is going to post it through the online processing is there, but mostly we follow the batch processing because bulk transactions are there. It means very simple language if we will try to understand here. For example, let's say today we got a loan of suppose USD, and as per the current rate we spent for this, so it is let's say 82,000 INR. Okay, it is as per today's transaction, as per the today's exchange rate update. Then in month end, when we are going to do the evaluate this loan, if we, let's say the loan value is same, and that day, let's say because of exchange rate fluctuation, if we are going to spend 80,100 INR, now in this case, we are spending more to repay the same loan amount, which is your 100 USD. Okay, so in this case, 100, which is 100 INR, which is our loss. So this will be transferred to your P&L account. If it is vice versa, that means if you are going to pay, let's say 81,900, so because of exchange rate fluctuation, it's our gain, and that we are going to transfer. This will be your debit entry, and if it is gain, then it will be transferred to P&L, but as an income, as an income or as a credit. Okay, but no one is going to do this postings or this valuation automatically. System is going to calculate, and system is going to do the posting. So that practically we will run it, but right now you can just have a look into this. So this is one loan account which is transaction was posted in a foreign currency, and the equivalent amount you can see 40,879. Now this one is as per the rate updated on 1st May. On 31st July, when we evaluated this one, that day we have to spend more, and that is 236.33. So that means we are spending 236.33 more to repay that loan amount, or to repay that particular principal amount. So this difference we are transferring to our P&L as exchange rate loss. So this entry will be posted by the system automatically, exchange rate loss. So this is our debit entry, and same amount added with your loan amount. So loan amount we can see earlier it was valuated as 40,879.85, but after this month end valuation, now it becomes 41,116.18. So this one is important one. So once you will complete your general settings and all, then valuation method, valuation area, the required accounting principle, the ledger settings, once it will be done, and the mapping and all, automatically you will get this entry in your books of accounts. So which is your foreign currency valuation. Particularly it is one of our month-end activities. So in another video, I will touch that valuation area and valuation method, and we will take a small scenario and we will do the foreign currency valuation. Thank you very much.